Hey, I'm Oren. This is the Game of Money. I'm here with Nick Ayala. We are talking about raising money. So, unfortunately, my day job is to raise money. Got to get in front of investors, tell them a story. If I confuse them, they say in various myriads of ways, I'm confused. The various ways that they say I'm confused is they don't return phone calls, they hang up, they get off the Zoom call, they don't send money, they don't sign documents, they sign documents, don't send money, they send money and want it back. They don't send money and want it back anyway. And all kinds of various permutations. Yeah. So, I put a lot of money and time and effort into putting together the pitch materials, the deck, the story, and eventually it clicks and I can just give it. And so, the difficulty, I think, in today's market, a lot of people don't have the opportunity to do the pitch over and over and over again. They kind of put together a deck. They want to talk, they have the optionality to talk to 6, 7, 8 people, firms. It's just not enough for somebody who's not experienced raising money to have enough polish, work out the bugs, get the story right and feel credible. So, my guidance to people, even for myself in the deals that I'm doing, I'm experienced as anybody, is, get a bunch of cycles. So they put together a deal that they want to do. And then mistakenly they go out and pitch their best relationships, best prospects first, burn those to the ground. I mean, I think there is a lot of disrespect in the market for the pitch, because there's a notion that you can get on Business Insider, download somebody else's pitch that raised $30 million in an industry that's not yours, in a market that's not yours, in a business not yours, in a business you know nothing about, for people you don't know anything about, in a product you've never seen or touched before, but you're somehow going to download that and make it work for you as a template. So this is all goofed up. Nick, I mean, is any of this making sense to you?
Oh, it all makes sense to me. I think it's funny. There's this misconception about money this day in the market, and I'm sure you've seen it. It's like, oh, I'm going to raise $1 billion. I'm going to raise $300 million. And as if it's like this simple thing to do, right? I mean, raising $1 million is not easy, so especially if you've never done it, right?
Okay. I really don't need you poking your eyeballs inside of my head. The next blog post I was going to put out, it's like, hell, are you going out and talking to people about $5 million, $8 million, $18 million, $80 million? The most amount of money you ever raised in your life was $85,000 for a BMW M4.
Yeah. And you got it from a bank.
The most amount of money anybody has ever given you is $85,000.
Right.
Or maybe $1 million for an asset-backed, loan on a home. You've never talked to anybody about $1 million of equity, but you're out for 20, 30. Honestly, just look in the mirror. Don't let me say it. Say it to yourself. What am I doing? Like, get some data on yourself. If I could go back 20 years and listen to this, geez, it would have saved me 5, 7 years. What are you doing, Oren Klaff, 28 years old, talking to people about $8 million? You've never raised $50,000. And now there's programs, Y Combinator, Techstars, that help people go out and raise $75,000, $150,000, $200,000. Yet you, smart, good-looking, capable, interesting, charismatic, but really zero experience, are going to, be a linebacker in the NFL. Come on. So
it's true. It's true.
I don't think, to your point, I don't think people realize just what the state of affairs is. They're still sort of fetishizing 2020. We could fog a mirror and, raise $15, $20 million for a bathing ape, crypto, whatever meme, NFT thing. But that, and I don't even think it was that easy back then. Those people raised that money, still worked hard, were in the paint, got an insider, had an angle, found a niche, ground it out. It was never easy. It's never going to be easy.
Never.
So I think step one to me is just right size your expectations on time and amount to your experience. What are you doing? I mean, it's sort of the same thing with working out. I just went through a workout with my son. He's 11, right? Like round 2, I'm like 11-year-old, like how he plays hockey. Like round 2, I'm like, he's like, come on, old man, right? What's going on? Can't you keep up? I'm like, I brought you into this world that can take you out. But I don't know. I dived into an 11-year-old workout. How hard can it be? But he's a AA hockey player. Working
He's
on
got
the ice
more
twice a day.
stamina though. He's got a little more stamina.
Looked easy. It's still hard, and I know what I'm doing. I have a pitch that works. I'm not here because it's easy. I'm here because I thought it would be easy.
Isn't that damn truth? And it might have been easier at one point than it is today, but it's no matter what, it's daunting, it's tough. People just don't realize that when you're new at raising capital, you think it's so simple, but you also look at it from the lens of yourself, right? These people look at it from like, I need this money, I need this. Well, it's not about you, it's about the investor. You have to put yourself in their shoes because they're looking at one thing, Oren, and you know it. Am I going to get my capital back? It's not even the return they're looking at right away. They're looking at, are you going to protect and give my money back? If I give you $1 million, am I going to at least get that back, right? That's number one. Right. Number two is, what's my return?
Yeah. My partner, for many years, he's like, Oren, the best deals that I ever do are like when I just, at the end of a couple years, just get my money back. Like, those are some of the best deals. Just the money actually came back. It's the true and ability to talk to true risk investor. Because you probably don't have an asset, a deal, an idea that can actually attract true risk capital, which happens in a couple ecosystems, right? Like if you want true risk, move to one zip code, Palo Alto. Otherwise, just right size yourself.
Right.
So how do you view risk reward in capital? Like what's a deal that you've seen, sort of get into the market and have some success?
Yeah, I think recently, like the market's shifting so much, right? In so many ways, and there's so much dry powder. And we thought after your election, people were just going to be ready to roll and ready to deploy capital. And then everything kind of got halted and we got the tariffs and all this stuff. So I've seen a lot of recaps, especially in the real estate side, multifamily side. We're seeing some recaps right now. I'm doing a big deal right now on a recap portfolio of this firm they have about a 1.5 billion under management. We're recapping about a third of their portfolio. And so I've seen a lot of recaps in that space. That's taking place, taking on different debt. And I think right now on the real estate side, we're seeing a lot of these loans come due from the banks or from these people that took out these floating loans, and they're coming due. So we're going to see a ton of opportunity there. So I think there's going to be a lot of money that comes out from the sidelines if they're with the right operators and the right GPs on the multifamily side right now, currently coming to market. Raising bigger capital, if you have the right connections and people and firms, they're still deploying for the most part. Not the mid-tier, smaller tier family office things that are holding a little more, but they're still deploying. They're looking for deals. They want deals. But for me, recently, recapping has seemed to have been a little bit stronger in the current market over the last 3 to 5 months.
And so define, for people listening in, certainly from my side, and recap is a new or hazy term. So define that in your market.
Yeah. So, I mean, if it's in the real estate side, right? And let's say they have X amount of properties and we take the debt that's there and we average out. They might have a loan at 2.5, 2.6. They might have a loan at 8, depending on when they took it out. They may have whatever it might be, and we average them together. And let's say their loan average is 6.5, 7%, 7.5%, whatever that means. And if we can take that and recap that from a sovereign wealth fund, a family office, or something of that sort, and get a lower interest rate on average, we can recap that portfolio. They can pull some cash out to go ahead and continue to buy more property because they need cash to buy more property. And then when interest rates hopefully lower here, hopefully we'll see over the next X amount of time, we don't know, they can then again take that same portfolio, recap it again with the banks if they need to. So that's kind of what recap is and what we're doing structurally on some properties.
And so if I'm out with a real estate financing, so it's called stabilized multifamily asset, $20 million asset, I've got a couple $1 million of equity, let's say, so 10%, we get $2.5 million, of equity there. I've got some, 50, 60% of debt financing, lined up, and I'm looking for the rest of the equity to close.
Right.
Where, what do I have to do to go sell that deal? So not an A market, B, leading towards a tertiary market, say Houston, Cincinnati, I don't know, San Diego, something like that. I mean, I have guys telling me, that there's just not, the capital is not available, even, when you have a balance sheet, even when you have PGs, those are still difficult financings. So what are you seeing in the market, B, tertiary market, $20 million deal, a non-core, sort of alternative asset, multifamily, and where you're bringing on equity, balance sheet, and where's the rest of the equity and the debt coming from?
Yeah, great question. And it's different than where it was a year ago. It's different, definitely different where it goes 2 or 3 years ago. That's for sure. I think if you're someone trying to raise capital for the first time, it's not going to be easy to raise that kind of capital right now on a deal like that. I mean, you better have a really good return for the investor and some kind of a track record, because right now people are holding on tighter than before. So I think you need to if you're new, you need to partner with somebody that has a good track record. And if you're not new, looking for that kind of capital, you should already have a really good investor database. You should already be reaching out to people and staying in front. And I think that's where most people go wrong, or where I know you're really freaking good at it, is staying in front of your investors at all times. One thing we do, which I find very valuable, is when we're looking at deals on my real estate side, we're looking at deals, we pass on way more than we pull the trigger on, right? We will actually take those deals that we pass on and send investors information that, hey, we just looked at this 300 unit property and we passed on it. Here's why. All I'm doing, one, it's education for them and they love it. And it actually has some of our highest open rates when we do stuff like that. But really what I'm doing is staying in front of them, and I can keep sending them information like that. And then when I have a deal, they're opening it. I'm in front of them still. They're busy people. And I think what happens is, if you don't right now have a investor database that trust, you're screwed right now.
I think for me, and this is the same way. I mean, if you're a first time, second time, capital raiser for an asset like that, I think it's really tough. Like, the people raising capital are focusing inward. So I think about it like net new should be maybe 20% of your plan, and
right.
And 80% of your capital should come from existing relationships. So I think that's a lesson one there. If I don't have existing relationships, I need to attach myself to some kind of mothership right now. I think net,
absolutely.
If you are committed to raising capital for 80% new and 20% existing relationships that are 100% new, you have to have something structurally compelling. So for example, we're assuming a HUD loan, in your market, right? We're assuming a HUD loan at 2.1, and rates right now for this asset class is 8.5. So you're getting, a 5-point spread.
Amazing.
Structurally, something like that. There has to be something structurally compelling about it. Not, hey, I got to take. So when I worked, I've told the story many times. I worked for a billionaire, Steve Kim, who sold his company to Alcatel and then ran Alcatel Ventures, which is, equity and, early stage investing. But inside that group, he's like, we view this as risk stacking. So how many risks are we going to stack up before the scale just goes, and it hits, in my mind, it kind of hits the dunk tank, right? And you're sitting there, you're like, the CEO is sitting on the dunk tank thing. There's too much weight on it. The seat falls out and he's in the water, right? Or in the acid bath, whatever, in today's market. So, what are the risks? Like, hey, the strategy risk, like, hey, it's a repositioning, the market risk, the management risk, the track record risk, the interest rate risk, the what. So at some point, you've got too many risks stack up, and
right.
the dunk tank, hit dunk tank weight, and you fall in the water. And so if one of your risks is track record, management experience, and market size and asset class, those are four very typical. You better have something offsetting, which
right.
is going to be yield and some kind of structural element.
Absolutely.
That is super compelling. I mean, even in an equity deal we have, and we just, I told you we're $25-30 million for an equity deal, but our partner, is a 65-year-old company, the 1,000 employees that owns the entire market. There's no other technology in the market. So it's a $40 billion domestic US market. And our partner owns the entire market. They have the patents, the technology, the supply chain, it's a manufacturing deal, all the manufacturing equipment. There's no secondary player, of any meaningful that's major. So they own the entire market and have for 65 years. So it's a structural element that's compelling. It's really allowed us to lever off of them. So just going out with some kind of asset and saying, hey, I want 100% or 80% net new capital, very painful.
Right. Even with a damn good story right there as well.
How important is story versus, structural components? Like how much can story really cover?
Well, I think story is extremely important to an extent, right? Because, investors get so many deals across their desk. They need deal flow. They're looking for deal flow, but they have a ton of it coming across their desk. So I think story and tugging at their heart in some shape, their heartstring in some way at the beginning, gets them to say, all right, instead of a 3-minute, I'm looking at deals in 3 minutes, I'm evaluating going, no, versus hold on, I might look longer into this one, right? That story at least gives you the hold on, let me look longer into this one. It gives you a chance to get into the talks, into the weeds, so to speak, further down the road, to where now if you have a good deal, you have the right structure, and it's favorable for an actual investor, not just the founder or the person that needs the money. Now you got a shot to have a meeting and a conversation, a real conversation that could possibly go further. So I think story is crazy important, but it ends at a certain spot, right? Now, if you don't have the story, no one's looking. I mean, you're just another pitch deck. It's passing.
I think especially in the market you're in, I think the generalists are gone and people have a specific investment thesis. Because how do you compete? So if you I think people out raising money don't do enough to put themselves in the minds or the understanding of how the investor works. So if you're managing a $150 million fund, right? Guess what you see? Foreign investors, you see shit, right? Because you have no center of gravity. No, you don't have enough money, to do real deals. So you see really in the general market, relatively low quality deals compared to, just pick a market basket of names compared with, Goldman Sachs, Bank of America, JP Morgan, and the sub brands, Vanguard that they operate in, and see the really like high quality deals from high quality operators. So you see, medium to low quality deals from medium to low quality operators. So how do you function in the market? You focus, right? Because you can't win anything of any merit. There's so much money above you that wins the A, B deals. So you only get C and D deals, which are scary, right? So you go, okay, well, I want to get A deals because I want to, return on capital. I want a good track record. I want to deploy capital. I want to be in this game for a long time. But in order to get A deals, you have to narrow your focus. So now you're like, we do multifamily, freeway corridor, right? Between 100, to 175 units, between 8 to 12 years old, in which the per door is 84,000 to and you can spin up into a next market level by spending $250 per door and upgrading the lobby with 1.5 million and amenities to a beam amenity package. Like that's their thesis, and you're walking in there going woo, 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 like an orangutan, showing them stuff, and they want to stay current. They're going to look at the deal. They're going to be polite, especially when LinkedIn and these feedback systems came back around. So now the investors are like, yeah, fantastic. Really appreciate. We'll take a look at it and let you know. They can't tell you what they want to tell you because A, you won't listen, right? And B, they just get a bad reputation of being rude. So they just, matter of fact,
politely say no.
They're just sitting there. This is what I do, right? So they're sitting there with their Moleskine notebook, and their Lamy fountain pen, and it's just laying there, and you're pitching. Wait for them to like pick it up, and write something down, right? Which might happen in like the 15, 20. When they write something down, take a note of it. Like that's your whole pitch, because they're just sitting there patiently waiting for you to get back get through all the obvious stuff, all the stuff that's already in the deck, all the stuff they already know. They've already seen the deal before. And, when are they going to get to something new, and insightful and moves the deal forward? But because they're so, the kind of groups you reach have I guess you can reflect on it, just such a more specific buy box than you think. So they take a look at things that are general because they want to stay in touch with market, relationships, people come around, you might have another deal. And generally, like, especially at the lower end of a firm, that's their job is to take meetings. Okay, look at stuff and have report pipeline up. But the reality is their buy box is so small.
That's right. Absolutely. Very small, very specific. Yeah. They don't need to have, they don't need to do 20 deals a year. They do 2, they do 3. There's not a ton of, they don't have to do a lot.
It's like the time Nick got a date with that volleyball player, right? And she was like, yeah, I just want lunch. This is not actually a date, man.
I'm just hungry.
I just need lunch.
Oh, that's great. Yeah, I'm with you, man. I have a super good connection that I made recently. Great guy down here. And he has a pool of investors that are up in New York, the majority of them in New York. And, they're super specific. When I first started talking to him, it was, like you said, very general. Send me this. This is what we look for. We're pretty deal agnostic, so to speak, right? So I'm sending him deals that are good deals, but then they comes back, so no, it's not in our wheelhouse, not in our wheelhouse. I'm going, okay, so can you now define, since we have a relationship, what's in your wheelhouse? You're not deal agnostic, and that's okay. What's actually in your wheelhouse? And Oren, he literally does 2 deals a year, 3. Last year, they didn't even do a deal. They do big enough deals. They don't have to do deals all the time. And that's a lot of the things that people don't realize who they're going to. They're not in dire need of your deal. So, got to separate.
So, I want to round the corner here and hit a topic and get your perspective on it. Okay. I feel like, let me get my stress ball.
Uh-oh.
This stress ball does not de-stress. It's stress inducing. What it is, it's got these little, so it's a reaction ball, right? So you throw it and it bounces randomly. And then, you try and catch where it bounces. So it's for fast reaction times.
Okay. Got it.
So it's not stress reducing, it's stress inducing.
Are you training to be an F1 driver here? Got to get your reaction time?
I'm training my son to be a AA hockey player. And so I have a lot of this stuff, lying around, for when he gets here.
That's awesome.
But yeah, I might start racing Formula One. They're looking for a 55-year-old private equity manager out of Southern California, to be on the Formula One circuit. Maybe I'll start with Alpine, and move my way
maybe you got a shot there.
I'm going to work my way up. Right. I got a shot. I'm pretty good. I have, what, are you following did you go to the Miami Grand Prix?
Yeah, I do quite a bit. I follow Formula One quite a bit. I love it.
Yeah, that's excellent. Yeah, my son races go-karts.
Nice.
So we go up to the track here. We actually have a Red Bull team, Formula One team simulator. A guy was riding his motorcycle by here, and I'm like, hey, we have an office park. I have 35 motorcycles over there, and I'm like, hey man, just let you know we're having the hockey team over because they watch tape on the big screen. So there's gonna be kids running around, so just take it easy. So I was talking to him for a bit, and it turns out he's a Red Bull, not Formula One, but he's a trophy truck driver. He goes all over the world.
Oh, super cool.
Yeah, and you can Google his name. I'm not going to give it here because the rest of the story. He's like, hey man, I have a 1-bedroom apartment. Right now I have a girlfriend. I'm like, congratulations. You're 28 years old. And he's like, yeah, the entire apartment is taken up by my simulator. Like, it's massive. Can I keep it here? We have the big space. And I'm like, yeah, sure. So we plug it in, put our name in it, and Red Bull calls us. And the company that manages it from, like, you can't have this. Like, it picked up the IP address, and they're like, it's basically stolen. This belongs to Seth. And I'm like, no, he let us use it. And they're like, he can't let you use it. It's the Red Bull racing simulator. So it's a whole big thing. But we have Red Bull racing simulator. It does Formula One and trophy truck. It's pretty cool.
Very
You
cool.
can't let kids use it. It will rip your arm off. What a lot of people don't recognize, like those simulators, like oh yeah, if you crash, and it starts spinning, and you don't, like, the box that spins the wheel is so strong because it's got the the reaction and the feedback and the mechanics and everything for a real car. And if you don't know what you're doing, you hold on to it, it'll just rip it like a bad sci-fi movie. It'll just rip your elbows out of the sockets. Yeah, this stuff is serious. So that's stress inducing too. But I was going to say, and I want to get your comment on it. I feel like in this market, 8 out of 10 investors you meet have no money. And people are running around going, I'm an investor. Right. I think your first job is not pitching, but it's going, 4 words will fix your life. What's your capital overhang? So if they go, duh, you know, like if you don't know what a capital overhang is, you don't have capital overhang, right?
Right.
If you are wondering what Fight Club is, then, you know, you're not in Fight Club.
You're not in Fight Club. Yeah, no, I agree with that.
What's your experience with so many investors, you know, being a call fund, being a intermediary, being a broker, not having any capital, not disclosing it and saying, hey, I'm an investor, because the word just doesn't have a lot of definition to it.
Well, I think it's happened in the market completely, right? How many funds do you know now that are private equity funds that they're not really actually private equity funds? They're just calling themselves a private equity fund. I mean, they're popping up everywhere. The numbers are staggering when you look at the statistics. And I think a lot of it has to do with social media and looking a certain way for social media or for people. And then when it comes down to it, you know, they might have the ability to do smaller deals, maybe, but generally they don't have the actual real capital to be able to deploy, or even the connections that have the real capital.
I think the problem is the word fund, because it used to mean something.
Right. You know, yeah, everyone's got a fund now.
80s and 90s, like, we had a fund. You didn't have a bunch of people running around going to have a fund and didn't have a fund. But it's not a technical or legal definition. So you can just say, you know, I have a fund, and you know, it's a cool sounding badge of merit that you can run around saying, you know, hey, I have a fund, but you don't have anything. And so where is your capital from? And if somebody can't answer that clear, and people who have capital love telling you, right? They're not ashamed of it. It's not a secret. Like, that's what they talk about.
Absolutely.
We have a fund. We raise capital from the Boston Fireman's Fund, from the Harvard Endowment, from CalPERS, from the Michael Dell. You know, they are used to saying what is their, you know, who their LPs are.
Right.
So there's no secret LPs. There's no secret asset managers. There's no Dubai. If you hear Dubai, I don't know, like, what your experience is. You're closer to Dubai than I am, but money only flows one way between Dubai and the United States. And that's from the United States to Dubai. It doesn't come this way. So none of that stuff really exists. Where's the money? Somebody should be able to explain and demonstrate, and it should be, you know, Googleable where the money actually comes from.
Absolutely. No question about it.
If you're talking to a fund.
Yeah, and so, that's doing due diligence, right? Sorry to cut you off. That's doing due diligence on the people you're talking to or whatnot. It's obviously super important.
I mean, I'm guilty of it. I go into a pitch, I get 40 minutes in, and I realize this is theater. There's no. I told you, my son plays hockey. Sometimes we go to tournaments, and they just can't. Hockey is different from baseball. Baseball, soccer, there's like a million teams. You know, you have A flight, B flight, D flight, C flight, E flight, and in each flight, you know, there's 15 teams, and they have to multi-division each flight. In hockey, it's like 3 teams. So you have BB playing A, playing AA, and the scores are always 8-1, 1-8. You know, it doesn't mean anything. If you're at a soccer tournament and you lose 8-1, like, your kid sucks, okay? Because there's enough. The next thing, because there's not enough teams at the tournaments to match, to match up. Hockey's very different, because you need ice. You don't just need like dirt and a $8 ball. You need like $1 million of gear for 30 ice skaters to run around a rink. So, but it reminds me of capital raising, because there's just not enough providers and companies to have good matching, you know, mechanisms. And so there's always some mismatch. Like, your deal is too good, you know, and the capital provider is too weak. You know, your deal is too bad, they're too strong. It's just this search costs are so high, which is why once you get an installed base of investors or people believe in you, that is like,
Gold.
that's, I would say the way I learned it, the way you raise money is you go professionally, is you go, look, here's our plan. I don't need any money right now. Here's a plan, lock it up. I'm going to come back in 9 months. Let's pull it back out. If I've done everything in here, then you just, you give me the money without a lot of negotiation on price. If I miss anything, then you go, hey, it's either a discount or not a deal, but I'll be back, and watch me from afar. The problem with real estate transactions is they don't tend to not wait that long.
Yeah, but it's almost like doing a capital call without doing a capital call yet, right? You're literally setting up the investor right off the bat. That's the best way, I agree, to raise money, and that's kind of stuff that I show people too. Is like, if you can kind of have a capital call structure without trying to actually raise the capital today, show them deals, show them what you do, get them in your pool, stay in front of them, talk to them, build a relationship with them. The money will be there. If they have the money, truly have the money will be there when the deal shows up for you. And I think that's where people go wrong, is they think they're going to raise money on the first call, the second call. When the reality is, it takes at least minimally 4 to 5 touches, and many times much more than that. I mean, I've raised money from people that last year I raised capital from some people, not big capital, $5, $6, $7 million in capital, that from investors and people that I've known and built relationships with for 7, 8 years, and have never raised capital from them ever. And, now's the time. So, you just never know when and where it's coming from. It's being a professional about it. It's staying in front of people. It's acting and conducting yourself in the right way. And when that deal arises, being ready, being disciplined, being structured, having a real deal with real structure, with real paperwork, real legal paperwork. All those small things that people take for granted in a deal. But that's how it adds up.
It's I feel like here's the last thing I would say. It feels to me much more like a Hollywood movie. Like if you know anybody who's an actor, this job sucks, right? First of all,
raising capital is tough, man. It's rough.
Because I lived in Hollywood, the Entourage. Did you ever watch Entourage? Entourage was behind my house, the entire series. The house that
cool.
What's his name was in,
that Vinny Chase was in.
Yeah. Vinny Chase's house was behind my house in Beverly Hills, and so they ran their power cable through my lot. I agreed to let them do it. The actors marching up and down, and they would run a scene, just like riding on a exercise bike, and Vinny walks up and is like, "Hey, are you going to the thing?" Right? And then they cut, run again, and he'd like walk up, like, "Hey, are you going to the thing tonight?" They're like, cut, like, "I want to get a different angle," right? Hold on, let's get a different lens, and he'll have to do that one thing like 40 times.
Right.
It's not like you think it's like freestyling. These 20-minute takes in which how do you like them apples? And it's not Good Will Hunting. Like TV shows and acting is so hard. Like the sausage making in movies is so much work, and it's so hard, and people love it because they love it. But raising capital is the same way. It's so much work. You hear you see it on TechCrunch, or you see it on Medium, or you hear it on Nick's podcast. Hey, I raised $7 million. Pitch, went in, kicked the door down, told him what the is up. I'm like, pay or don't. Like, I'm out of here. And then they ran up to the plane. I had to reopen the door, and the stewardess was like, hey, these people out here on the runway, want to talk to you, and like, tell them I'm out of here. And then they wired me the next day. Like, those stories do happen. They happen.
Yeah,
they happen all the time. They happen all the time, once in a lifetime.
Exactly right.
Right.
Jesus, it's crazy. But you're right. Raising capital is tough, man. It's a tough job. It's a tough life. It's not easy. It's great. It's very rewarding. You get to build a lot of good relationships and meet great people, but it is rough.
It is. It's I feel like whenever I get a capital raise, when you watch a cop show, they're like, hey, what are you doing down here? Oh, I caught a murder case. They're like, oh, and they're like, yeah, and then they're like, the whole series starts. It's like whenever I get a capital raise, I'm like that beat cop. Oh, I caught a murder case. John Doe, nameless John Doe, under the bridge. No ID. No family. In the morgue. Left pinky cut off and stuck in his ear. Like, what am I supposed to do with this one?
So true, man. It's so true.
Can I
Especially
give
when
it
you get the
back?
guys that,
Anybody else
especially when
want
you,
this?
yeah, right. Especially when you get the guys and gals that think that you're going to raise it within like 3 days. That's a good one.
Yeah.
Raise it right away. Don't worry.
Yeah.
It'll be in your bank account tomorrow. No worries.
I can, but why? Why? Like what? Why I can do it, but why? I got to stress my whole system, to go
Right.
get you 30 million bucks.
Right.
So are
Right.
you doing mainly real estate, or are you in the equity and private equity, like company? You're doing company building and real estate, or just how do you split your time
Yeah.
and
We,
focus?
we kind of do a lot of different types. Real estate's definitely, I would say 65-70% of it. And I think that's just natural in general just in the space. But we do a lot of stuff for M&A transactions as well, and buying companies and acquiring companies. I've acquired some companies myself, so raising for whether it's for my company or for others. Those are kind of the main things. And then I have some stuff on the infrastructure side, some bigger projects that we're raising for currently. So it's a little bit of a mix, but I would tell you that real estate's probably the biggest bucket by far.
So, and what's on the private side? What's in your buy box? Size,
On
growth rate, scale.
on real estate or
Exit.
just in general?
Yeah, no, on operating company.
So generally with our capital partners, 50 million is like minimum check for the majority of our capital. I mean, hundreds really where they want to start, but 50, is kind of a minimum check size. We'll raise smaller amounts if we think it's a deal that we like, we want to see go through, have a good relationship with the founder, think we can get it done in a good period of time, quick period of time, and make some good introductions. But that 50 is kind of like a ground floor.
And you doing that SPV structure, or where do you get where does your comp come through?
Yeah, more of an SPV structure. We have. I'm an RIA as well, so I have all this licensing.
You are. Oh, I didn't
Yeah,
know that.
yeah, I am. So I have 65, 63, 82, and then we use a broker
It's
dealer
like
on
that's
the
like that
backside.
song with the area codes in Los Angeles: 310-760-818-858-241.
That's right.
The 360. Yeah,
Got to have them
but
all, right? I mean, just to cover the basis. That's what they're there for. They're to cover the basis. I'm not. We don't take any AUM or anything like that. It's just cover
yeah.
the
So
basis of what
you
we're
actually
doing.
don't need an SPV though. You can just get paid a fee.
I can get paid a fee, and then we can do it through a back end through the broker dealer. It depends how we're raising. If we're just taking a fee and a back end, that's how we'll do it. If we're going to take some equity, a GP stake in a deal or some kind of equity or deal, we'll structure something differently. Just kind of depends on the
Nice.
deal. Yeah.
I have a deal to show you that would normally just go up. I did it myself. So normally I skipped over, all my regular investors. I just funded it myself. So I put 30 million in with me and my investors. So it's we'll be at a $60 million revenue run rate this year, first commercial year. We'll be IPO bound 26, early 27. And is a U.S. It's on I started doing it before we got tariffs and U.S. manufacturing, but it's a U.S. high tech manufacturing firm using Italian technology that's super differentiated. I think I mentioned we're doing $20 million run rate employees. We won't keep that $10 million per employee run rate, 170,000 square feet in Dallas, Texas, $15 million of equipment, there on site. And we have, 6,000 of the things we make in distribution. It's a real company with real equity in it. So, not a startup, not AI, not a software company, not CBD, Bitcoin, not mining copper on asteroids, not building robots, not putting AI in robots, not fintech, not a meme coin. I'm trying to think what else is out there. Not a meme coin, not a AI on anything, and just high tech manufacturing for the American consumer, most cashed up $13 trillion consumer in the world.
Did you start that from scratch or did you acquire that?
Yeah, from scratch. Yeah.
Very cool. Amazing.
I put the first dollar in it. Yeah, I've been in it for almost 5 years.
Awesome. That's
so
awesome. I'd
we
love
did
to
the
see
technology, we did the partner, we did the infrastructure, we did the management team. Got the equipment, got the IP done, are now in manufacturing and have product into distribution, and now we're scaling IPO.
Love it. Hopefully the market cooperates here over the next few year, 2 years for you on that side, which I'm assuming it will at that point. So
well, we don't really need cooperation, because if you think about it, like an IPO for us is not to raise capital; it's just liquidity for the investors, because our business plan is fully funded, so we're just building balance sheet.
So you can go direct to market then with that, right? You just go direct to market. Yeah, got it.
Yeah. And so I need 300. NASDAQ requires 300 investors to go direct to market, unrestricted. So I'm still, I'm still adding some investors to that list. So, we'll take guys, at the minimum. As you would say 50 million, like I don't think I have anybody with more than 1.5 million in. And,
right.
most of our guys are sort of 250, 500, maybe 1 million, even less. I don't need somebody coming in there, taking a board seat, running I've been running it for 5 years.
Yeah.
As a portfolio company. I don't need Nick coming in and going, what's our fintech, what's our blockchain strategy? Like we manufacture
doing all right.
products.
You're making it work.
Yeah.
Right.
Yeah.
Yeah. No, I totally get that. And I understand that process. I have a good buddy who does that, who takes companies direct to exchange. So I understand the process, the time frame, the cost.
It's a NASDAQ, listing, $600, $700 million valuation, revenue target next year, and end of year 100, 120, 150 million bucks. So rapidly scale, real company, real manufacturing, and we just have that tailwind, tariffs coming in, blocking our competition, and lifting us in the market. We didn't expect it, we didn't plan on it, but we got it. So really
good for you. Good for you.
So
That's
how do we show your guys that deal?
Shoot me an email. You guys have my email address. Please shoot me an email. I'd love to see it. And yeah,
we don't have your email address. It's like when I was like 16, 17 in high school, I had a girlfriend. There were no phones, no pagers. Her family didn't have a phone. We had a phone. We were rich. My dad was a college professor. And so we just have to meet up down on Friday nights. This is my girlfriend. We didn't meet up on Friday night, and we didn't have each other's. I don't have your email and number. Just meet me down at the cruise in Boca Raton.
Yeah, exactly. Get down here, fly down. We'll book you an overnight flight, and you'll be here in the morning. We can talk about it.
To book it, can you just put me on the plane, on the Nick
plane?
Yeah,
exactly. I'll fly the plane over to you. Yeah.
Air Nick. What's Nick? What's the crappiest car you have
currently? 911.
911. Yeah. So this is funny because in California,
which is awesome. I love that car. But.
Yeah, in Florida, because you need air conditioning, right? No, I was just there in Tampa. There's no crappy cars. Come to California, it's like a badge of honor. People are driving like 68 Impala, 72 Nova SS. I drive, my crappiest car is a 1983 Toyota pickup truck.
Nothing wrong with that.
Didn't even have name.
Gets you where you need to go.
It wasn't like wasn't a Tacoma or a Tundra, or Ayala,
just a Toyota.
It was just called a pickup truck. But it doesn't need air conditioning. It doesn't need like modern stuff. So California is so different from Florida.
Yeah, Florida's a unique place. There's no doubt about it.
Amazing.
Yeah. It's also a wonderful place, good people, and there's no state income tax here, which is nice.
Yeah, it is. I would say I'm going to come to Boca Raton and look for a 911, but it's like the Boca Raton Camry. If you like 9 of them.
You're not wrong. You're not wrong.
9 of them lined up. Nick, are you Nick? No. Are you Nick? No. Is that him? Beard, baseball hat? No. Oh, you're not Nick? Joe. Okay.
Well, I look forward to seeing you. Please do, and vice versa. I would love to link up. That'd be amazing.
When do you come to California?
I was just there. I go to Napa every year. I don't think that's very close to you, though, is it?
Oh, it's not.
Okay.
On Air Nick, it's 35 minutes on Air Nick.
It's super quick. Exactly. Building tunnels like Elon. I was just there a few months back. I normally get there every September, August, September. I go to Car Week every year in Monterey, so I'm there for that, and then make the trip up to Napa with my wife generally. So, but if I get there earlier or make a trip out, I would love to do so.
Okay, great. Well, I have a distributor in Florida, so I get there often enough. So we'll make that happen. But I'll invite you on Wednesday, Tampa.
Okay.
Yeah.
Perfect.
On Wednesday, I have a pitch, have a presentation to investors. If you want to look over their shoulder, see the deal, that way. Yeah, you could just sort of look in Wednesday at noon Pacific.
That's tomorrow.
Wednesday, yeah.
Oren, right?
Noon,
tomorrow?
Yeah, tomorrow, noon Pacific, 3-year time.
I would love to. Could you or your team send me that info?
Yeah, I'll send it to you. Yeah.
Yeah.
Okay, excellent. And then if the 911 is the worst car you have, what's the best car you have?
One of the McLarens, I would say. My most fun and favorite car. I'm a big McLaren guy, so
I have the G550 squared, the big one.
The big one.
Yeah.
The big guy.
Big. So we love that. I was getting her G-Wagon, and then we stepped into this X5M frozen black. So the X5M frozen black, I'm telling you, that's the best car in America. 617 horsepower, we'll chug around. It has all the self-driving capability. You just put in, drive me to Los Angeles mode. That thing is a beast. I mean, it's a race car, SUV, unbelievable. Like, that's a spaceship. Like, that is peak car. Cars are not going to get better than the X5M.
I've never driven in one. I got to be honest.
Yeah, go drive it.
Maybe I'll have to take a look.
The worst thing about it is I took it in for a service, and they had an M4. They had an M4 Kith there, right? And it's just such a good example of storytelling. They're like, this is the only car this is the only used car, had like 1,000 miles on it, we've ever had in the new car showroom. I was like, story, I'm in, right? So
that's it, I'm in. Package it up.
Yeah, package it up. So we got so if she shows up in the X5M frozen black, and I have the M4 Kith frozen black, we show up like mafia. People are just like, we give up.
Who
the
hell is this guy?
Yeah.
Who
are these people? So
I love
it. That's for me, the game of money is that it just allows you to do the fun stuff without thinking too hard about it.
That's it, man. It's just about the freedom and being able to send your kids to an amazing private school or wherever you want, and being able to take vacations and being able to just have freedom. That's all. Money's a tool. And if you can look at it like that, it's there for you.
Sorry, so
we all go through ups and downs.
You say what's that? Vacation?
Vacation.
What is it? Is that Latin? Is that Latin for something?
You need one.
Yeah.
Huh?
What does that mean?
It probably is Latin.
Yeah. I'll have to look. I'm going to use the AI to look it up. All right, cool.
Well, it's a vacation for somebody, right?
Yeah.
It might not be for you or for I, because we're always working, but it's a vacation for someone, or the children, or the wife.
It's complicated. Like when you're so hard in the paint all the time, and then you're like, okay, stop, do nothing. Like,
it's impossible.
Yeah.
Yeah, you can't do it.
Yeah.
Can't do it.
Exactly.
That's a great analogy.
Yeah.
It's true.
So that's it. All right. I'll see you on Wednesday. I think you'll enjoy it. The presentation is actually called The Game of Money. So I do I do my investment thesis at the beginning, and then I do the actual asset that we have at the end of it. But I'll spin through it really quickly. You get to see the studio. You get to see the spaceship. It involves Italy. It involves, you can't see it here, but I've got a Ducati 1299R Panigale, an MV Agusta 800
beautiful.
Dragster Brutale, and an Aprilia RS 250R as part of the presentation. So it has a big, Italian focus to it. You get Italy, you get Italian motorcycles, and you actually get to see a deal.
Love it. I can't wait, dude. I appreciate the invite. I look forward to it. I'm honored to be invited. So thank you.
All right, cool. We'll see you tomorrow.
And I can't wait to see the cars, by the way.
Oh, yeah. Yeah.
Beautiful.
Yeah.
Love it. I can't wait to look at some of them.
Yeah. And they're all drivers. I'm not running a museum anymore. Like, if I can't drive it, I'm not keeping it. Yeah.
I love that. Absolutely. That's what a car's for, is to freaking drive it. All good.
Thanks
for everything you do,
yeah.
man. All the
Thanks,
content
man.
you put out, books, everything. You're awesome.
It.
So I appreciate you.
All right. Talk to you later.
Thanks.
Yeah. Bye.
Later.